Alrighty. We're going to go ahead and kick it off. Before we get into kind of like trading volatility and everything, once again, I want to let everyone know this is not financial advice. If you lose your money, it's your money. If you make money, great for you. But I want to introduce our amazing panelists. So Tom, why don't you go ahead and kick it off? Rug.
Yeah. Whoa. Somebody wanted me not to introduce myself. I'm Tom Crown. You can check me out on YouTube. I do a lot of trading content. I'm just a crypto nerd. I love charts, and yeah, I'm happy to be here. Thanks for having us.
Can we get an extra microphone? But Maren, go ahead.
Hi, I'm Maren. That was really loud. I trade based on astrology, and I founded something called Astrace, which does that as well.
And also we have Wendy.
So I'm Wendy O, and I'm a mom, and I like to trade volatile markets because they're fun. But yeah, I do a little bit of swing trading here and there, and that's actually how I was able to grow my platform, was posting charts and content on crypto Twitter.
And also for everyone that doesn't understand kind of like what we do as well, is like the industry does leverage trade, all these different financial tools that are going to be on there. But in terms of kind of like the volatility that we've seen this year, just kind of like 2022, I mean, even past month or a few months alone, in terms of kind of like sentiment, in terms of your communities and kind of like how you see the space right now, where do you think it's going to go? Is it going to be more volatile that's going to be leading up to it? And if there's any catalyst that you feel is kind of like within that area within the next few months?
I'll hop on that. We've lost quite a few market makers in crypto, and if you're not aware, market makers are extremely important because they make sure when you're trading or buying something that you're able to buy it for market price and there's not a whole lot of slippage or scam wicks. I'm sure most of you have seen those scam wicks, which are fun to an extent, but not when you get stopped out. So as far as the volatility goes, we're going to see a lot more of it happen, and one of the things that I'm practicing is no action is an action. And I'm not trying to trade every single altcoin, not trying to take every single Bitcoin trade. I'm looking for more longer-term swing trades and accumulating for now, hodling until the next run.
Those, I call them the Darth Vader, was it the Darth Vader freaking wicks? Because they'll literally just wreck longs and shorts.
And they'll make you cry.
Quick squeeze.
You call your mom and cry.
Darth Maul, there we go. It's literally just kind of like a quick, literally like not even a minute burst of basically ups, downs, and it liquidates shorts and longs. And people don't understand that if you don't have to take a position, don't take it. Like if you feel like it's too comfortable, or I mean too risky, and you're sitting there and you're literally just looking at the charts day by day, or kind of like even within certain time frames, to just protect yourself, because at any moment those wicks kind of come in. So next one is, we've seen some market makers really fall this year, and it has really affected a lot of the communities and kind of like the industry as well. Now, do you think that there's going to be more algorithmic trading that's going to be happening pretty soon, or is it basically the ones that are still left kind of like how does it?
Yeah, I'd go pretty far too. It's just the people that are left. I know that a lot of retail, is confused and therefore just not at all engaged. I know myself as like a very retail trader. Like, there's too much going on. Like, the no position is a position. Even if I think that I have a read, it just feels very uncomfortable in a market where it feels just a bit like unsteady. So I'd say for now it's mostly the people that are left. I think that we're not seeing like retail euphoria entering. So for better or for worse, it's a much, much less engaged market.
Yeah, we also started seeing volume drop off a lot too.
Yeah. And
that's when it's really risky, because literally when volume drops off, a spike of volume can just really, crazy extend positions. I think the other day you can kind of like see a lot of the, like especially like the market goes up, like Litecoin pumped like what, 40% or something like that. And from there, you start seeing people get stopped out for every little single trade. If you're looking at like a short-term time frame of like 5 to 10 minute marks, or even 1 hour, I would say as well, people are getting liquidated so quickly, shorts and longs. So the next portion I want to kind of go into as well is that with the volatility within the market, how do people stay safe? Like, what tips would you guys kind of give to them to say, hey, look, you need to review some of these things before going into a position?
Well, first of all, having a plan, knowing what you're doing, planning out where you're entering, exiting, if you're going to be doing a short-term trade. I think another thing people kind of gloss over is you don't need to use leverage. We get caught up in this, I need to be rich by dinner. It doesn't happen. The more leverage you use, you're just asking to be wiped out. You can trade spot. In fact, that's all we traded for years. We didn't really use leverage until maybe 2018 it became popular, and it's a faster way to lose money. Leverage has a purpose. It's just not typically used by new traders, retail traders right away. It's a hedging tool. It's not a get-rich-quick thing. I think my advice for people would be get rid of the I'm going to be rich by dinner thought. In fact, go the other way. Be like, I'm going to try to get rich as slow as possible. I know it sounds bad, but what happens is you're taking less risk, and you're less likely to just lose everything, and that's really the cardinal rule of trading is if you lose all your money, you can't keep trading, so you're out. And that's all you need to avoid, and leverage gets you there, so risk off.
Tips from you guys as well?
I would agree with the leverage statement. I don't think that with the low volume and with the dynamics, I wouldn't feel comfortable touching that. I'd say for the majority of people, no position is probably the best position unless you really think that you understand where things are going and you can, I think with the amount of risk that one can take, it should be enough where you can sleep comfortably at night. And at this time, I would say that perhaps that's lower for everyone just in general. And that you can just watch and observe. It's entertaining. You don't need to be the person that's being the entertaining one. I don't want to get caught up in this. I'm just going to watch for now, which is, I think, valid, even if you think that we bottomed or something. There's always another trade. There's no need to be too preemptive.
I wanted to add, she said, if you feel uncomfortable, you can't sleep at night. That is the biggest tell that you're taking on too much risk. You should never feel that way. You're going to lose trades. And if you have this image that you're never going to lose trades, that's not how it works. The best traders in the world lose. The difference is the best traders in the world know they're going to lose, and that's calculated into their plan. I'm going to win, let's say, more than 30% of my trades. And that's all we need to be profitable if you have your risk reward calculated out. It's built in. And if you're nervous about it, you're sweating it, you're thinking about it, that means you're doing something wrong. You should deleverage or reduce position size until you're I'm not really that concerned about the individual trade outcome, because that is not how any of it works. It's a marathon.
So I have a little bit of a long answer here. One of the things I scream about on my socials, especially YouTube and TikTok, is coming up with a trading or investing plan. I do not care what you guys do with your money. All I ask is that you consider using disposable income and that you have a bullish plan and a bearish plan. That basically means how long are you going to hold for? When are you going to take profit? How long are you willing, or what percentage are you willing to take a loss at? And I put out a video on my YouTube channel the other day why I sold all of my crypto. And it got close to 100,000 views. And the amount of hate that I'm getting in the comments, and I'm going to explain why this is important. There was a particular exchange that was rumored to be insolvent. We are in protect your capital season. Any crypto exchange, no matter how licensed and regulated it is, could go down at any given time. And if your funds are stuck on that exchange, guess what? Your funds are gone. You might be able to get some of them back in bankruptcy court. That could take 10 years. Look at Mt. Gox. But what I did is I analyzed all the positions that I had on that particular exchange. And I said, you know what? I'm going to go ahead and sell a couple of these positions for a loss because they're active trading positions. I sold some of my moon bags, which means I own those bags free and clear. And then I removed all of my Bitcoin, my Ethereum stables, and a couple of the bigger moon bags off of that exchange. And the reason why I did that was to mitigate risk. The name of the game is protecting your capital. We don't know how long this bear market is going to be. We know that we're going to get regulation. We don't know when it's coming. But part of being responsible for your own actions and investing in trading is also being able to take a loss. It's okay to take a loss. If you don't have any losses, that means that you're holding too long and your bags are probably going to zero. And the idea of you never lose unless you sell is moronic. It really is. Because what you're doing is you're in crypto to make money, to improve the quality of life for yourself, your family members, or whatever it is. And if you're going to hold till zero, it makes absolute no sense. So having a trading or investing plan is going to be crucial. Coming up with a bearish and bullish plan is also going to be crucial, and not talking in absolutes. And sometimes we have to make erratic decisions to protect our capital. And at the end of the day, it wasn't fun for me to lose money, but it was also a good learning opportunity for myself and for my audience to talk about what loss is and to normalize it. Because we see so many people on the internet, oh, these gains, these gains, these gains. But they're taking losses also. And Tom or Maren, what is the ratio, or what is the percentage of profitable trade, or the strike rate? Isn't it like 60%? That's
Like
a good
none.
one.
Yeah, 60 is like very profitable. That's like, yeah.
Yeah, so if you have a 60% strike rate, that means a little bit over half of your calls are correct. And we just don't talk about it enough. And I think it's important to normalize taking losses. But you can also take losses in a controlled environment. If you're taking a 20% loss, I think that could be potentially good, because if you were not going to take that 20% loss and you're still holding that coin, the company files for Chapter 11 or the project goes down, then you're going to get a zero. Then you're going to get 100% loss, and nobody wants that.
Yeah, and like there was a few topics that I wanted to kind of point from there too. Is like, especially with risk, if you feel, you have to manage your own risk, because if you do not, don't expect to make money. Honestly, like markets go up and down every single day, and if you don't have a strategy for it, there's going to be market makers that actually hunt stop loss positions, and we kind of like know of the exchange that we're talking about that hunts stop losses, and it hurts the industry, because like everyone that was so over leveraged and going up to like 100x, 125x on some exchanges and stuff, you're going into a very, very risky position that you're just kind of like leaving yourself open for these market makers to be able to swoop in, take it really quickly, and then bounce right afterwards. But another topic that I wanted to touch on was like education portion. So like there's not a lot of kind of content to where a lot of people are really understanding the full levels of risk. Where do you feel, for you guys, where do you feel is like the biggest lesson that they should really look into before they even start trading?
I think that basic financial literacy, understanding order books, inflows, outflows, just seeing like an entire generation of young people find out about trading and crypto through TikTok specifically was, of course, like endearing and great to see interest, but also a little bit terrifying, because I know that I, for one, was encountering information on how to use leverage before I knew at all what any sort of risk mitigation, stop loss, like how to calculate your trade, like just everything was about gains and 100x. And I think you should be able to understand how exactly an exchange or a trade works, who's on the other side of it, if you're using an AMM, or like how that's being, you should understand the workings of what you're using. And it doesn't need to be too complicated. I think that there's still things on exchanges that I don't understand, and therefore I don't touch them. But a lot of people are entering into a system that they are prey in, rather than like at all interacting with the system. So I would just hope that now that we are in a little bit less of a euphoric period, that there's more, a little more tiptoeing before just fully going all in. And I think particularly, like I say this as someone who's like on fucking TikTok, like don't learn how to do anything through that app. Like it's gonna be all just like 15 seconds. YouTube is better for that. So don't trust anything financial on there that's a guide of any kind.
Make it all back in one trade, huh?
Oh, no. That's where you're going to go, I've done that before, and I got that position got liquidated.
Yeah, especially whenever new traders come into the space, I would always tell them, like, they would ask me, Michael, you know more about, crypto and kind of like trading a little bit. Like, what would I kind of like give to them? It's like, dude, if you never traded, don't just go in spot. Just literally just do spot trading.
Paper
and then,
trade.
Yeah, or paper
Yeah.
trading, right? So spot trade, paper trade, whichever way. Play with a little bit of amount, see if it's good, and then from there, it's like, are you overvalued? Are you super risky? Like even from like some of my friends that are really first time getting into the space, I will tell them just place in $100. If you feel like you want to trade full time, go in there with $100. See if you can make it to 110. Right.
I did that for my first trade on Bybit. I put it into XRP, and I didn't even know what 50x leverage meant. So it was immediately liquidated before I even got the notification that I had a trade. I got an email saying, your position has been liquidated, like before I was like, well, I learned, so.
Another thing that I want to talk about too is there's a lot, like most of these crypto exchanges, they have demo platforms within the exchange. I think it's a fantastic tool. Like, it's a great, great tool. And like, there's a lot of people on the internet that'll give you shit about it. They're like, oh, you're an idiot. You don't know what you're doing. Why would you paper trade? Guess what? If you do not feel confident, maybe if you're tired or you're hungry or it's late or you're feeling emotional or something happened, those are things you want to put in your trading investing journal. But it's okay to not take a trade and just do a paper trade. Why do you want to do that? Because you want to get the experience. You want to be actually able to enter something and to time it out and see if that worked. And what you can do is you can use that paper trade and you can gauge your emotions, you can gauge the amount of capital you use, you can gauge the way the market was, you can write all these things down, and then you can go back and hold yourself accountable for it. Or maybe go back to that part of your journal and say, you know what, this trade ended up working out well because I did X, Y, and Z, and then apply that to a trade that you actually have capital on the table. And that's okay. We're here to make money. You're here to protect your capital, not to lose it.
If you're ever 100% profitable, you are going to get that loss. Like there's no trader in the world that is 100% profitable every single trade. So just how she was saying earlier, take losses. You know, try not to have it to where it's super deep cuts into your portfolio. I think like in terms of traders, whenever they do their first trades or so, they use probably like 5 to 10% of their portfolio. And even for that, that's also risky as well. Some traders are like, hey, YOLO, I'll go in 100x freaking all in at once to try to make it back. But
that never works. Like the people that I've literally never seen anything like that work. Like you have to be fairly boring, in my opinion. Like even the success, like it's gonna all come crashing down. It just doesn't work.
Here's something funny. Last year, after Dcentral Miami, we had an after party at one of the places with Zed. And I think you guys saw this meme going around, but this guy got liquidated, a hedge fund manager got liquidated outside of the club on the ground, holding a laptop. And I knew who he was too and everything. And we're like, what happened? He's like, he had his whole entire portfolio basically all in one trade. I'm like, you over-leveraged greedy? you over-leverage yourself, you're going to get wrecked at the club. So
You will lose. Like, that doesn't work.
I mean, and also too, setting rules. And I want Tom to talk about this a little bit more too, but set rules for yourself. Like when I travel, I don't take trades. I don't, because I'm busy doing so many other things. I'm tired, I'm fatigued, I'm hungry, I'm feeling all of these emotions. And guys get emotions too. I know some of you guys in the crowd are like, no, I don't feel anything. No, everybody has emotions. It's part of being a human. But it's important to be in tune with your emotions, and that's one of the rules I have. I do not trade when I travel. It makes no sense. I get wrecked.
There's always another trade. Like literally always. Like there's another day. So like, chill.
What are some of the rules you have, Marin, though?
So similarly, like if I don't feel 100%, I just don't make a trade. Like it's similar with astrology. Like if something's coming up and I just don't want to research it, I'm not going to talk about it. Like if there's a trade coming up, I don't have a read, I'm not going to take it. No big deal. So I have to feel like I'm in the right state of mind, and it's someone that was traveling insanely moving, like absurd situations over the past, I'd say like 3 months. I'm like, I haven't really even looked at the market intensely, which is fine. If I'm not like zoned in on it, I don't need to make a trade, and I don't feel FOMO. Like literally this never ends. Like you'll get your shot. And for me, I risk much less, like I'd say under 1% of my portfolio every trade. Because not that I wouldn't mind risking more, but I don't feel the need to. I would rather do little by little over time. And I also don't like to take too many positions because I feel much better just tracking like only ETH and Bitcoin. That feels much better to me. I can understand the price action, know that there's volume there. But I think mostly the general one is if I'm like tired, like I'm not going to be trading past like 8, 9 p.m. I'm a morning person. By then, no, I'm not going to open my laptop. You cannot get me in. So knowing yourself and when you're most mentally on point, I think is for anything, honestly. Like you shouldn't be engaging in anything unless you feel mentally competent. If you're hungry, tired, probably not.
Another funny thing was you actually called it when it was on one of your tweets. You actually called it on a certain date, and FTX failed that day. So
yeah.
You want to talk a little bit about that and kind of like how you came to that?
Yeah, I mean, it was an eclipse, and eclipses tend to be the pivotal events for the year anyway. Like any year, just every 6 months under that season tends to be chaotic. It was so many, you could even just say like textbook, if you're looking at astrology, there's certain more intense alignments. It was just so many of them stacked that I was like, I mean, some people could have shorted. I'm like, I'm not even entering. Like, this just looks very chaotic, and it felt just, yeah, it was, I don't have due diligence to go into FTX's back end and predict like, oh yeah, it was FTX or whatever, but I was just like, guys, unstable, so yeah.
Yeah, and literally FTX had it to where Alameda could not get liquidated. So it was up-only market for so long, and kind of like now we're starting to see the market kind of rebound back to where it's kind of like leveled at, before everything happened as well. And a lot of funds, even like if you look at like June, July timeframe, like a lot of funds were affected by the Luna crash and kind of like the whole ecosystem, Celsius. So from that point right now, do you think we're at the bottom or close to the bottom? And if so, not financial advice, but how far are we from kind of like having this all over with?
I'll be vindicated. I'm going to be vindicated at 10K, and I can't wait for it. And $750 Ethereum. Again, not financial advice. I have bids set there. If it doesn't happen, I'm okay with it. But at the same time, I'm really still leaning on this 4-year cycle with Bitcoin operating and the 85% correction. I don't think we've seen the bottom yet. It's a gut feeling I have, and on top of it, we still don't know what's going on with Genesis. If we lose Genesis, it's a really, really big catalyst for the market. Really, really big.
Yeah, there's nothing that looks as extreme as that eclipse coming up, you could say. So it's not like I'm expecting another like 80% from here drawdown or anything, but I don't like the astrology of March, so that makes me tentative over. And I would see this being just like a crabbing situation. Like I don't think we have the volume or the interest to go hugely up in a recovery and then hugely down again. But I agree, like I feel like enough people are waiting for 10K that like there have to be a couple other shoes to drop. Like it's not like, I don't know. And then I think 10K as well, somewhere around there. But I don't think near, maybe. I'm just sitting back.
What about you, Tom?
I mean, if I knew that answer, I wouldn't be here. Nobody knows. That's what makes them bottom. No one knows. People in hindsight will say, "Oh, I knew it and I called it." It's just not reality. But what you can do as an investor, this is still trading, but it's kind of an investor approach, is probably what I've heard Wendy talk about many times. I know I do this as well. Is you don't need to know the bottom. If you have capital, you can layer orders, and the ones that fill are a gift, and the ones that don't, it's just you cancel the order and get your money back. That way, your capital is at least kind of scaling into the low. I mean, this requires belief, though. You have to believe that Bitcoin and crypto are going to succeed and they're going to continue growing. That's really not a question in my mind, but it has to not be a question in your mind to approach it this way. That is really the only successful way I've ever seen anyone attempt to time a bottom. It just doesn't work. If we're all looking at 10K, maybe it'll be 9, maybe it'll be 11. It's never going to be clean.
Yeah, everyone's always like, I can time the bottom, I can find a way to do it. If you can, reach out to me. Just let me know. So, but also for that too, I don't think we're close to anywhere near towards the bottom yet. I mean, even if we did wick down another 10%, how is that going to affect me compared to the 65 all the way down to?
Yeah, agreed. I'm like, I don't really care. Like, come on. It's yeah.
Now it's so much of a discount, and you also have to look at kind of miners too, and miner capitulation. It's not profitable right now. Well, now it's getting back up there, but it's almost at the point where, hey, if you're turning on your machines, you're losing money to mine, which means that there are going to be miners that are going to be having to say, hey, look, we have to shut down operations or sell our Bitcoin. So that's the part where it's going to be a little bit of a catalyst to what I see, in terms of it might have another dip, but hey, another 5% down, another 10% up, whichever way, it's not going to be too much of an effect because we already gotten down 85%. So.
But do you remember when the miners capitulated? I think it was back in 2018, and we were not supposed to break that $7,000 area. I was sitting at an OTC desk, and the owner of the OTC desk told me, if we lose this, the miners are going to capitulate. They're going to shut off. Sure enough, like a month later, we ended up breaking that area. We dumped to 3,400, 3,200, and we ranged there, and it was absolute hell on earth. So, I would love for 10K to be the bottom. I don't know if I'm right or not, but at the same time, always prepare for the worst, especially if you're trading and investing, and especially if you're somebody who's very interested in altcoins, because I don't think we've seen the bottom yet. And on top of it, we have a lot of firms that have taken out collateralized loan on their Bitcoin so they don't have to, cash it out. And that's something that's dangerous too. They have margin calls and they have liquidation areas. So if a lot of these firms that were taking them out at at higher areas, they're going to have to continue to add more margin. And if they can't do that, then what happens?
Those margin calls. But also before we're about to kind of kick off the panel to finish up and wrap up and everything. But for everyone that's watching on Binance, CoinMarketCap, DEX tools, be safe. And also at the same time, what do you want what would you want to have as like a final note to kind of like let them know in terms of like tips or anything you want to kind of be able to let them know? Because there are going to be people that are right now actively trading and also watching. So on Binance.
Trading and investing plan, make a moon bag, never bet against the market. The market does not care about you any way, shape, or form. It doesn't. I know that society has made us think that, you know, we get a second chance and whatnot, but the market does not care about you. So please consider taking profit, have a trading or investing plan with a bullish and bear scenario, and understand things can always get a lot worse before they get better.
Mary?
Yeah, I'd say major thing is if you feel the need to trade this right now, have a plan. Why are you entering here? When would you feel comfortable exiting? End of story, like execute. Also, if you're in capital preservation mode, then no trade is likely going to be the best trade. I'm standing by that. I'm just gonna like wait this out right now, not because I don't feel like the market will do certain things, but because I'm not willing to risk that capital currently, and there's not the volume that makes me feel comfortable. I would say rethink leverage. You probably don't need to be doing that, and it's a great time to learn from what the market's doing because that experience of just watching it, even if you're not taking a trade, will serve you well. And be careful with following anyone else right now, I would say, because they likely aren't secure either, that even if they feel like, oh, we're bottomed, we haven't, whatever. It's just a lot of talk, a lot of energy that is like negative judging, and I would say it's okay to sit back. There's no rush in any of this, so have a plan if you are going to enter, but if you aren't very secure and then have a certain amount to risk, there's no need. You can just watch.
Great thoughts. Be patient. Be picky. Like, let the market come to you. Don't chase. It starts going out, you're chasing up, you're chasing down, you're just going to end up like buying high, selling low. Be picky. Say, I don't want this unless it goes to this level. And then you have to stick by it. You can't just change your plan in the moment. It's a cycle. People just get caught up in it. Be demanding.
It's like at the store. If you get something at a discount, be like, I'm not buying this unless it's waiting for a year, right? It's a lot easier. And for that as well, like, what I think in terms of like everyone should know, especially if you're trading, is that just be careful. Like if you feel like you're over risked, do not place the house on one bet, because most likely the market makers and their algorithms are there. Like the markets are 24/7. There's no one that can sit there 24/7 actively trade and be remotely sane, right? You're trading against algorithms, you're trading against bots, you're also trading against firms that have a lot more capital. So for you, make sure that you preserve it. And I'd rather take a 5% loss than to take a 50% loss. I'd rather take a 5% profit than be greedy and take a 100% profit. And also for that too, it's like we've seen a lot of big firms kind of over leverage and within overnight gone, right? Hundreds of millions of dollars left the ecosystem. Where did it go? Nobody knows. But also on top of that too, I want to give clap for the panelists and everyone.
Clap for Michael and Dcentral for putting together this amazing conference in the bear market. Bear markets are hard, guys, and also
it's not a bear market; it's a builder's market.
It's a protect your capital market, but also to give yourself a round of applause for being here and being interested and not capitulating and just being here. It's important.
Well, on that note, guys, we're going to go ahead and wrap up the panel. Hope you guys enjoyed. And for the ones that are tuning in at home, please make sure you smash the like button, subscribe, and all those thingies. So, good to go.